Hey everyone, and welcome to this explainer. We're diving right into something I like to call the financial orchard, from seed investment to Crore milestone. We're going to break down the actual real-world mechanics of taking a tiny starting sum and, well, turning it into a massive financial milestone. So let's get right into it.
Okay, picture this. It's Friday, you've just wrapped up a long week at your first real job, and out of nowhere, your boss hands you a surprise 10,000 rupee festival bonus. Be honest, what's your gut reaction? What are you going to do with that money? If you're a young professional, that urge to just treat yourself is incredibly strong. And hey, it's totally normal. You're probably thinking about, upgrading your phone, booking a quick weekend getaway, or just going on a shopping spree. I mean, it feels like free money, right? But we're going to introduce a massive paradigm shift here. Most people spend it, but one person plants it. Look, it's totally valid to want to spend that cash. We work hard, we want to enjoy the fruits of our labor. But what if we looked at that 10,000 rupees not as a fruit to eat right now, but as a seed? That's the life-changing alternative right there. The exact second you start treating money like a seed instead of just a coupon to buy stuff, you completely alter the trajectory of your financial life. Let's actually look at a real-world example to see how this plays out. Meet Rahul, our spender, and Arjun, our investor. They're both 23, they make the exact same salary, and they both get that exact same 10 grand bonus. Rahul, he goes out that very night and drops it all on a high-end pair of headphones. Instant gratification, boom. Arjun, on the other hand, doesn't just let it sit in a savings account to get eaten by inflation. He opens a brokerage account and puts that 10,000 to work in a diversified equity index fund. And of course, his friends literally laugh at him. They're like, Arjun, man, it's only 10,000 rupees. What difference is that going to make? Arjun just says, we'll see. It's the perfect contrast, right? The trap of immediate, depreciating gratification versus the quiet, powerful habit of investing. To really wrap our heads around Arjun's mindset, we've got to talk about the financial seed. Imagine you're holding a ripe, juicy mango in one hand and a rough, dry mango seed in the other. Which one's more valuable? Everyone points to the fruit, obviously. But the true wealth? It's actually hidden inside that seed. Why? Because that single seed has the infinite potential to produce a whole tree, pumping out hundreds of mangoes year after year. When Rahul spent his money, it was like eating the fruit, consumed, gone forever. But Arjun's money became a seed. It's planted in the market now, literally holding infinite future potential.
All right, let's fast forward exactly 1 year. Rahul's headphones? Yeah, they're already scratched, maybe even obsolete. But what about Arjun? After 12 months, his little seed has grown to about 11,000 rupees. It grew slowly, and honestly, it looks completely unimpressive. His friends are laughing again, mocking him for waiting a whole year just to make a measly $1,000. But what they don't get about the early days of compounding is that it's exactly like trying to push a massive heavy stone wheel. That first push is agonizingly slow. It feels impossible, but it is absolutely essential for what happens next.
And this brings us to the real secret sauce, the snowball effect. See, Arjun doesn't just give it that one push and walk away. The real magic happens when he adds momentum. He decides to start consistently adding 5,000 rupees to his investment every single month. Maybe sometimes a bit more, sometimes a bit less, but he never ever skips a month. By constantly packing more snow onto that rolling ball, it eventually becomes unstoppable. The snowball gets so huge that it starts gathering more snow on its own than Arjun could ever pack by hand. Basically, his money is now working way harder than he is.
Let's actually break down the mechanics here because we need to debunk a massive myth right now. You do not need a huge pile of savings to start building wealth. The mechanics of momentum really just come down to three things. First, the foundation, that initial 10 grand. Think of it as the first brick of your house. Second, the habit, that 5,000 rupee monthly action. And third, the fuel, time. The foundation gets you in the game, but it's that continuous habit mixed with the fuel of time that absolutely guarantees the math is going to work in your favor. Watch how wild this gets over a long timeline. Assuming an average annual return of, say, 12%, year 1 is super quiet. The seed is just planted. But by year 10, thanks to those 5,000 rupee monthly additions, we're seeing some really significant growth. The wheel is definitely turning. Now look at year 20. The curve is just taking off. We hit accelerated growth because compounding is doing all the heavy lifting now. And boom, by year 30, that simple early habit has snowballed into a massive 1 crore milestone. That crazy steep part at the end of the graph, that is exponential growth right there, in action.
But hey, what happened to Rahul, the guy who bought the headphones? Well, this sums up his reality perfectly. The biggest cost wasn't spending 10,000 rupees. It was losing decades of compound growth. See, Rahul just kept waiting. He told himself, oh, I'll invest when I get a promotion. Then he bought a bike. I'll invest after I get married. Expenses crept up. I'll invest when life settles down. But let's be real, life never settles down. Years later, it hits him. The true cost of those headphones wasn't 10 grand. The true cost was losing out on decades of compound growth. He let his own psychological barriers delay him. And when it comes to investing, time is literally the one asset you can never, ever buy back.
And that actually tackles another huge misconception. People are always asking, which stock is going to make me rich? They're totally obsessed with finding the perfect, high-performing stock, like investing is all about being some Wall Street genius or just getting insanely lucky. But honestly, the far better question to ask yourself is, what habit will make me wealthy? Because consistency is going to beat luck almost every single time. You absolutely do not need to be a stock-picking wizard to build a fortune.
So here it is, the real investing secret. And it is so much simpler than people think. Start early, invest regularly, stay invested, ignore all that short-term market noise, and just let time do the heavy lifting. Real financial freedom doesn't come from having a massive fortune on day one. It comes from your behavior. It's about discipline over drama. If you can just master your own habits and let time and compound interest do their thing quietly in the background, you've literally already won the game.
Think of it like this. Your monthly contributions are basically you planting one new tree every single month. In year 1, you've got a modest little grove of 12 trees. Pretty small. But by year 10, you're looking at a thriving orchard of 120 trees. And eventually comes the harvest. Those early investments grow into this massive financial orchard that pumps out thousands of fruits, dividends, interest, capital gains, and that keeps you wealthy and secure long after you've officially stopped working.
So, the big, crucial takeaway here is this. Your first 10,000 rupees isn't actually supposed to make you rich. It's supposed to change the way you think about money. Nobody becomes a millionaire off one tiny, lucky investment. But every single wealthy investor started with one foundational decision. 1 month, one habit, just one beginning. They made that mental shift from consuming wealth today to cultivating wealth for tomorrow. Which brings us to the end of this explainer, and it leaves us with really the only question that matters. What are you going to do with your first 10,000 rupees? Are you going to buy something that drops in value the second you take it out of the box? Or are you going to plant a seed, get that snowball rolling, and start growing your very own financial orchard? The choice is totally yours. But remember, your future wealth depends on that single decision. Thanks so much for joining me today, and I really encourage you, start planting those seeds right away.